Hello traders, welcome back to the channel. This is Janoy, and in this video guys, I'm going to break down how I was able to make $5,200 on one trade in just 2 days. I'm going to show you how. Let's go. Alright guys, so now what stock am I talking about? Guys, we've talked here on the channel a lot about EVs, or the EV stocks are super hot. So we like to jump in when the chart is right, when the pattern setup shows us 100%, at least that we can predict where price action is going to go. Alright, so in this video, I want to show you the profit from XPEV. Alright, we took this trade, and you can see after closing this trade out, our net profit is $5,294. Now I want to break it down and show you how I did it. I want to show you the thought process behind the trade. I want to show you, what are some of the things that we have to take into consideration before we actually go out and put the cash at risk, looking to get a return on our investment. All right, so guys, when I look at the chart XPVE, the first thing I did was identify what is the stock doing. And when we look at it, stock run up, and then from there we saw stock pull back. This is a retracement level right here. The stock found support, and then from there guys, we started to move up super nice, and this came across my attention, right? So when did it come across my attention? Well, from right around this level, when it bounced off the EMAs, I was watching it. I was not able to get in on this huge run up. However, price pulled back, and again guys, the stock pulled back right into the 10 and the 20 EMA. When I look at the pattern, big picture, I'm pretty much at this level. I was projecting that, okay, this looks like I can pretty much see, an inverse head and shoulders pattern setting up. What does that mean? An inverse head and shoulders pattern is pretty much a pattern that shows you that price was falling, and now we're reversing and we're actually moving back to the upside. It simply means that price was in a downtrend, and now the trend has switched, and the price action is looking to move on into the upside. All right, so the moment I identified that, my next job was to find the low risk entry to get in. Yes, some people got in here, they probably got shaked out when the price action started pull back, but after this pop up, I saw that there is a resistance level right inside this level here. How did I know that there is a resistance level at that specific level? Because price did not get back there yet. Well, this is when you have to get a little bit more technical, and you have to start understanding what are retracement levels, Fibonacci to be specific. All right, so when we look at it, this drop is a one move down, and now price is starting to recover. So sometimes when price is going to move up or down, it likes to retrace after price makes a big move to either side. All right, so in this case we fell, so the retracement level on this move down would be roughly right inside here. Now as a swing trade, this is very important for you to know, because you have to know where are you gonna get out of the trade, or what is the potential target level that you're looking for price action to move back to in order for you to make money, or in order for you to close the trade down. All right, so number one, I identified that, okay, price can get back roughly to $56 or $59. All right, and that was when price pulled back into the EMA right here. So I saw the bounce after the pullback, and I got in on the bounce. All right, the next day I was looking for price to continue higher, but you see right here is the first time price hit into this retracement level. And what happened? The price action got rejected. I did not get scared because, you know, in order for me to get scared, we would need a confirmation that the selling was going to continue. What does that mean? It means that we would need to see one more day of price action really selling, or we would have need to see where this thing just break down and continue to go down bearish. Yes, you know, if I saw where it broke the EMAs out, I got out of the trade, but none of that happened. So I stayed in the trade after taking my entry on this day. Also, the entry was a very precise entry because, you know, though the stock pop up and pull back, when it pulled back all the way down here, pretty much I was down just a little bit, and then, you know, you see some buying came in on this candlestick here, and that actually recovered the small loss that I was in. So because the entry was a good entry, I was not uncomfortable and try to just dip and get out of the trade because we had a small pullback. Now we just gotta wait one more day. Next day, price, you know, sell off a little bit, got bought back up, but nothing changed. We're pretty much the same place. Next day, price popped up. It didn't do nothing much again, and the next day, guys, price gapped up and pretty much almost pop out of the retracement level resistance. And on this day, that was the day that I took the profit. Why? Because the price action gap up, and then if you understand candlestick, this is simply, you know, a dark cloud candlestick, which is an indicator of a reversal, at least in the short term, right? So when I saw price gapped up, you know, I shut the trade down. I was using options, so I want to bring you in and show you just a little bit into my option sheet and talk a little bit about, you know, where the option was when I sold it, and also want to show you why you have to know when to get out of these trades. All right, so on my option sheet here, it doesn't tell me, it's telling my acquisition price, but for some reason it doesn't say the price on here when I sold it. But I know when I sold the option, I actually closed the trade out, and the option was going for $21.50. Why is this important? This is important because when we look at that very same option today, given that all of the volatility has gone left the stock, you can see that the option has pretty much died down. So I was trading the $40 call for April 16. All right, when we look at that, what are some things that I like to look at, or that needs to be present for me to consider taking that position? Well, I like to look at the open interest, and then I like to look at the specific price, strike price that would, you know, cause me to break even or become profitable in the trade in a super short term or super short period of time. What does that mean? It means that I want to get an option that is at least a 0.70 delta, and an option that, you know, I'm not paying a lot for the time value. Okay, and that's why I ended up choosing the $40 call, because it was in the money. I only needed like $3 to recover the entire, or I was only paying around $3 for time to hold this option all the way up till April, if I had to hold it all the way to April. It makes sense. So when I sold this trade and shut it down, my $40 call that I initially bought for around $15 was going for $21.50. All right, when we look at it now, if I didn't take that trade or take the profits, you know, this option literally dropped around $3-4 from just yesterday. So you can see when we go back and we look at the chart again, you can see how important it is, you know, to take the profit, because the stock pulled all the way back from around $60 and it's all the way down here into the $55 level. So technically that's around $5 the stock drop, you know. So it is very important, one, to pinpoint the correct entry, and I felt like we did a good job pointing out the entry here, because one, this was also a bull flag here, nice bull flag pullback. We could consider this as the breakout of the bull flag somewhat. You know, this is like a flag blowing in the wind, you know, and not just a flat top flag. Okay, so that's what makes the difference. After we broke out, then we continue to move higher into the retracement area. But the thing is, we realize that the stock is just not able to really break that resistance level, and that's why, you know, we shut the trade down super quick and just take the profit. And we will continue to evaluate the stock and see what it does. Here I have a hourly chart of the very same stock, XPEV. When we look at it, guys, this is important. We see the stock came into that 56, 59 level before. What happened? It sold off, right? We popped back up there again. We pulled back, didn't do nothing. Next day we popped up there, and look what happened, guys. We sell off again, because as of right now the stock doesn't have enough momentum to break out of this level. And that was also our targeted level that we were looking to shut the trade down and take the profit. All right, so 2-3 days, $5,500 profit on just this trade. I think that is a pretty good place to be. Why do I share this? I share it and break down how I do it, the background, what's the thought process, because I want to help you to understand how to do this, you know, for yourself, to take some of these trades and make some of these profits for your account. All right, so guys, if you did find some value inside this video, thank you for watching, and I will see you on the next one.